Good morning, everyone. I know I haven't been here for a while, but I came back to kind of show you guys how my stocks have grown since the time that I was here last time, which was about a year ago. As you can see, I now have a holding of $26,200. Um, in 2020, the road to the stock market has been pretty rocky. It has been going up and down, and I think I have pretty much regained what I've lost this year. To show you a snapshot of what's been going on, in the past week, my stock has gone up about 1.5%. In the past month, my stock has gone up about 10.42%. In the past 3 months, my stocks have lost about 2.62%. In the past past year, my stocks have gone up about 20%. And overall, and I started this in about 2018, my stocks have gone up about 17.7%. Not ideal. Obviously, without this plunge, my stocks would have done better, but maybe this plunge was what was needed in the stock market. As you can see, my lowest was 20,400, and my highest was 27,500. Now, I'm gonna show you my individual holdings. What I've been trying to do is to revert back from buying individual stocks and buying more ETFs and more diversified portfolio. That also means that I'm not just buying stocks. When I say stocks, I mean like total stock market index, emerging market index, but also that meant that I buy more of gold, more bonds as well. I've started doing that about a year ago, I guess, and that has really paid off because during this plunge, those specific sectors have done pretty well. When I say those specific sectors, I mean gold and bonds, and I'll show them to you. My first stock that I have is iShares Core S&P Total Stock Market. So this is basically equivalent to something like Vanguard Total Stock Market. What I did is that when stock market plunged, I sold my Vanguard Total Market because it was at a loss, and by selling it, I bought exact same total stock market offered by a different company. That way, I was able to claim my losses as a tax benefit, and then I was able to buy this. And since then, when did I buy this? I bought this March 19th, I'm sorry. Since then, it has done very well and went up 22%. So I pretty much bought it a little before the bottom, actually a lot before the bottom. It still has gone up 22%, which is pretty good. My thing is next is the Vanguard Emerging Market. I bought some more of this when the stock markets have plunged in expectation of them coming up as we recover from the coronavirus. However, they haven't really recovered very well. But I believe they are on their way to recovery, so I don't feel too bad about them. Another thing that I spent more money on and that haven't been doing so well is the DBC. This is the PowerShares DB Commodity Index Tracking. This one, is a commodity stock. I expected them to kind of like go up when the stock market plunges, but along with the oil market, this has done pretty bad. And when it dropped to $11, I bought some more of them. I bought 22 shares of them, and they're at about the same price. Eventually they will come up, but these sectors do bad and do good, do well sometimes. So, next one is the gold. Oh man, gold has fallen 5% today. Gold has gone up about a total of 50%. And obviously they're hyperinflated. If anything, this is a sector that I should size down rather than size up from now on. I have 6.15% of my portfolio. My initial goal was to get 6.5, but when I first started diversifying into that percentage, I thought it was a little high for me. to kind of put all that money in there, because it would be about like $2,000 or something. So I kind of held off, and it has come up nicely. I think initially it put about 5.5%. Next is the iShares 20-year Treasury bond. This also has been going up and down a little bit, but since the market crash, it has been doing pretty well. It has gone up about 16%, but as we know, as the stock markets regain, this may fall again. So this 16% really doesn't mean much. It kind of balances what I have, and it kind of stabilizes my portfolio. Next is the IEF, iShares 7 to 10-year Treasury bond. This has also done well. Still, nothing really special. Next is Tesla. My boy Tesla. I initially had 7 shares. I sold 3 at some point. Now I have 4, and it's done remarkably well. My average cost for this was $255. I was buying this when Tesla stocks were actively free falling. Should have bought more when it hit like $190, but I got a little scared. I stopped buying because I thought at that point that Tesla might go bankrupt, but thankfully it didn't, and it came right back up. At some point it was like I was having I was having like $4,000 return on this one, but I sold some of them because I knew they were going to kind of like fluctuate a little bit. Recently there was a market drop with the Tesla on March 20th, where the stock market dropped to 400. I may have should have bought more of it maybe, but I'm happy with where I am. Next is the Alibaba. I keep buying more and more. It's just a matter of when I buy them. Totally I have 5 shares, $1,000. Next is Amazon. I have 1 share of Amazon, $2,400. I was going to buy more of Amazon, but I feel like they're very overpriced, and I feel like there are going to be other companies that do better than Amazon. Like I myself is kind of unsatisfied with Amazon, so I might look into some other things. So I don't think I'm going to buy more of Amazon is what I'm saying. Google. I love Google. Google, I have 2 shares. I bought 1 more share when the stock market dropped, and the stock price for this was $10.50. Now it's $1,400, so I'm very happy that I bought it. Total up 35%. Vivint Solar. This is one of the company that I was buying because I only have 1.4% of my portfolio, but I believed them to be a good company. It was either Vivint Solar or the Sunrun, or also seems to be doing pretty well. Like when I say doing pretty well, it doesn't necessarily mean I thought they were doing well financially. It's just that I saw more of them pop up, so I was kind of happy to invest in them. Total 1.4% of my portfolio so far. That's dropped about 15%, which I don't really mind. It's a pretty small amount. Next, Air Energy. I think I should be buying more of this, and I should have bought more of this when this thing dropped again. Another solar company. Yes, it should have bought more when it was around here. $1,980. Done pretty well. 15%. It's a company that I believe in also. Tencent is also, it's a Chinese company that I also like a lot. So this is it's an online gaming company that also owns like a lot of other stuff. I think it owns some texting, etc. Something that I've been buying consistently. It's a good company. I should buy more when they drop, but now I don't know if I'm gonna buy them now. Look at the trend. It's been going on crazy. Uber. There's another one that would have from these mistakes. We learn more, but it was also one of the stocks that dropped dramatically when the stock market was hit in March. It went as far as $14, and I really should have bought more stocks back then, but I'm okay. I believe in Uber. I don't think Uber is going to go bankrupt. I think it's going to have a lot of downfall within the near future. But I think overall, with their automated driving, with their Uber Eats, with their taxi service, I think Uber will do well over time. It's just a matter of when. Obviously, we have to kind of overcome this economic crash that we're in, and I think after that it'll do fairly well. Delta, really one of the worst stocks, but I don't also care either. Delta has been pretty much free falling, and when it was $25, I bought some, $22. And I believe this is going to fall further. And to be honest, I think Delta is an amazing company, and I do want to buy more. I'm gonna let them fall a little bit, and at some point, maybe around like high teens, I would buy some more because they will recover. And when they recover, I wanna recover with them. I want to make money off of them. Visa is also another company, more like a blue chip company that Pfizer is another company that I bought a while ago, and I think it has done bad before it did well. Pfizer, I bought it kind of as a stabilizing stock. Pfizer has a lot of drugs that a lot of the doctors currently use, and I didn't feel like they're going to go bankrupt even in the face of recession, because we need those drugs. So I kind of kept it, and I bought it when it was dropping, but it dropped a little more, and it's about to bounce back up. I should have bought more when it was dropping, but I didn't. Carnival. I only have 2 shares of Carnival. I know Carnival has dropped as far as $9 at some point, $9 range. So it's kind of hoping that it falls further, so I could maybe invest more. But I only have 2 shares right now, which is about $30. But I bought them sort of because I wanted to get my feet in the water, just to see just to see how the stock does by looking at it in my stock portfolio. I'm obviously not hugely invested, but I do believe that if they don't go bankrupt, they will make a huge bounce back. But there's also a very, very good chance that they will go bankrupt. So I don't know. I'm a little shy in investing a large amount of money in this. JP Morgan Chase, another stock that I believe in, that I like, that have been doing poorly. It's obviously a bank stock. It's been somewhat doing poorly. I do believe JP Morgan is a very good stock. I hope to buy more. Actually, it looks like today might have been a good time to buy. My average cost was $118. Ooh, that's a big loss. That hurts. Teladoc is a recently bought stock. So basically, I know that a lot of doctors are not actually doing personal, like physical, face-to-face visits anymore. Rather, what they do is that they have the patients come in, and then have the patients log into a computer or something, and then just like talk to them, which makes sense because we don't want to be spitting on each other's face unnecessarily and spreading germs if you don't have to. So when the coronavirus hit, I thought maybe, hey, this is gonna do a good job. So I bought it, and yeah, it did. I mean, I didn't buy too much of it. My average cost was $120. It has gone up about $70 since then, and I made about 57%. Pretty good. Next is this one I actually didn't buy yet. It's a Chinese stock, Huami. I put a limit order just to kind of trigger and let me know, but I didn't buy it yet. Huami is a Chinese stock. Basically, they make electronics like Xiaomi, and I'm not sure if I'm saying it right, but that's actually the only company that I'm pretty much interested in. Xiaomi is they make cell phones, and they make a lot of other electronics back in China, and they use Alibaba or AliExpress to kind of like ship it all over the world. I don't think Americans actually use this a lot, but a lot of like Russians, a lot of those Southeastern countries actually use that company a lot. They make cheaper version, and the quality has been questionable, but I do believe their quality is improving, and despite being a cheaper version of pretty much everything like Samsung, Apple, I do believe that they are making somewhat of a dependable products now. So I want to invest in them a little bit more, but with the current stuff going on, they haven't been doing so well. I put a limit order at $9.60 because I thought that was a good price. I might jump in and when it falls to like $10-11 because maybe I shouldn't wait that long. JP Morgan is another stock that I bought very recently. Oh, I'm saying Nordstrom is another stock that I bought very recently. So basically, this is, as we know, it's a mega retail company. Retail companies have been hit very hard. I kind of wanted to use that opportunity for me to buy some of the retail stocks because, if they don't go bankrupt, and they may, like Marcus Neiman, they will bounce back. And to be honest, I'm at a stage where I'm young enough, I have enough cash holding to kind of take that risk. So I bought the stocks, average cost $16.60. They have done poorly, but let's see. Hopefully, with the reopening of the economy, people go back to physically shopping, and this market bounces up. But not sure about that. Indeed. And that's it. Those are all the stocks that I have. I still have a sizable amount of ETFs and some what I call as a stabilizing stock like DBC, gold, and TFTs. But other than that, I have a lot of individual stocks. My goal eventually, by the time I retire, maybe, is to have a diversified portfolio. The portfolio that I'm aiming for is really a modified version of All Weather by Ray Dalio. I didn't want it to go completely Ray Dalio, but I wanted to have a somewhat of a modified version of it. And that's all the stocks I have. If you guys have any questions, please let me know, and I will try to come back as soon as possible. See you guys.